This is Power 98.7. And now you're listening to Power Talk with Mbuyiseni and Ndlozi. 9 a.m. to midday. Taking your calls on 0861 987 000.
Welcome back, Bantwana Benkosi. Nginbonge nonke about those calls that came through and the open line, and certainly the breakfast team had a bust, as I understand, around the pregnancy question. I will try make efforts to go broadcast the show from UJ to understand why are students getting pregnant. But we now turn to the Johannesburg Stock Exchange, and I'm joined in studio by the CEO, Chief Executive Officer of the JSE, Dr. Leila Fourie. Thanks deeply for coming and creating time to come and speak with us.
Thanks, Mbuyiseni. It's awesome to be here and great to chat to your listeners. Thank you for having me.
Yes, so let me get right into it. The JSE at 130 years. It's older than apartheid, it's older than the ANC, it's older than the internet, it's older than space travel, it's older than all the companies listed at the moment on the JSE. It's older than all of them, maybe the exception of one. What is its current profile, its standing in the world, and its market capitalization?
Well, Mbuyiseni, we have been around for 138 years in November this year, so we've been here for a long time. We started in a mining tent, and that's where the first listings happened. And we've been through world wars. As you say, we've been through apartheid. We've been through the dawning of the new democracy. We have grown tremendously. I'll take us back to the 90s, because I'm sure most of the listeners have been, some of them have been around since then or just after. In the 90s, we had an open outcry system. We used to have people shouting their trades. That then shifted to a digital system in 1996, where we went online. If you come to the JSE now, you won't find any people shouting out to book their trades. It all happens behind very sophisticated computers. And since then, we've invested heavily in technology. We have very sophisticated markets, and we trade markets across all kinds of assets. So commodities like grains and white maize. We trade equities, which is like Standard Bank, MTN, Boxer. And we also trade derivatives or futures. And then you can also buy bonds, which is government debt. And so we've really built the market over the past couple of decades, and we've seen a vertical growth trajectory, and we've seen a lot more international interest in our market. More than 30% of our counters are dual listed. So companies like BHP was previously listed in London. They cancelled their listing in London, and now they are only listed in Australia and South Africa. So South Africa is doing very well on the global stage to attract funding from internationals. We are 22 trillion rand right now as in total market cap. And we've got just less than 300 companies listed on the exchange. And the exchange has really grown, particularly we're outperforming our global markets at the moment. If you look at the stats, the NASDAQ was year to date is only up by 13%, and our top 40 is up by 24%. So the JSE companies are outperforming both New York, and even the S&P is only up by 9.7%. So this is the place to invest this year, and people are getting returns where they've lost a lot of money on some of the large counters that have contracted globally.
Talking about the place to invest, the profile over the years of the JSE has experienced massive delistings, and this is at the backdrop of the success that you are putting. And I'm interested in a nuanced experience of this, where at the height of its operations there were 800 companies, and now less than 300. Often the explanation that is given to this varies from, investors wanting policy stability, that South Africa exhibits signs of a lot of political and policy instability. And yet, the 80s and the 70s were dramatically violent in South Africa. And there were investments on the one hand. On the other, in a different show, when the chairman's conversation hosted Mr. Rupert, he had something very interesting to say, Johan Rupert, that the Mbeki years were the most stable economically. It's like Mbeki got it right and we didn't invest. Are these delistings not mainly because there is a problem with the fact that our government is black-led?
Actually, the stats are very interesting, Mbuyiseni. If you look at the holistic picture, you've got to look at this over a 30-year period. And yes, we did have 800. In fact, 30 years ago, we had 682 listings. At that time, our market cap, so the value of the shares times the number of shares in issue, was 800 billion rand. 20 years ago, that went up to 1.8 trillion, and we had 466 listings. So we had a huge decline in the number of listings. Now, our market cap is 22 trillion rand. It's 350% of GDP, and we have much fewer listings. Now, if you look at the number of delistings over these periods, in the 90s, we averaged 58 delistings. In the 2000s, we averaged 47 delistings. In the 2010s, we only averaged 21 delistings. So it sounds like a very dramatic point, and I know a lot of people do raise it. A lot of the companies that are delisting are small companies that aren't liquid, and they are not able to get traction, and they're not able to grow. The larger companies that we've got are providing our savers who are effectively investing through pension funds, and that is really looking after their future in big, stable companies. Now, I'm not suggesting that big, stable companies are the only and the most important part of our economic growth, because we all know that the growth node comes from the small and medium enterprises. That's where Tesla started. It's where Amazon started, all in garages. So we have seen a drop in the number of listings, but the listings that are the companies that are delisting are those smaller companies, and so I think it's important to see these things in context. And our markets are very deep and liquid. We are the 19th largest by market cap, but in GDP terms, we are between 38th and 40th. As a country. So we punch way above our weight in the financial markets, and the value of that is that it gives the man in the street the opportunity to save for their retirement, and they save through their pension funds, which therefore then invest in the listed entities.
But you are presiding over an entity that should be hungry for lots of listings.
Yeah.
You do want the numbers to go back to 800. That's not only a strong stock exchange, but also the idea that at the moment there's also very little diversity. Majority of the activity is concentrated in few companies, which, as you say, are big. And I'm putting it to you that at the center sometimes the true reason for less listings on the JSE may be this question of the confidence of investors in the South African political stability. And I argue, and I'd like your reaction to that much more directly, that it is mainly not because of policy instability. There was more instability politically under apartheid,
absolutely,
particularly in the last 2 decades of apartheid, than there ever was under this democracy. So that the true reason maybe is confidence. It's other people may call it racism.
There's definitely confidence, and where I define confidence as investor confidence, does build build a perception, and it does build activity. There are also cyclicality factors, and you mentioned Johan Rupert's comment about Mbeki. One of the contextual factors that was very much in Mbeki's favor when he was in power was the commodities super cycle. Commodities were booming, and that not only grew our mines, but the mining tax that was paid grew the economy, and also they would have had much more capital investment, those mines, which was job creating. And so all of these things have a compounding effect. And there was a super cycle in the commodities environment. And we do have different cycles that affect the size and the effectiveness of these companies. Now, we've seen mining, which has been a highly concentrated sector on the exchange in the early teens, that sort of 2012 to 2015. It was much bigger than it is now. But ironically, we do want more listings, we do want more diversification, but we also want quality listings. And there was an active decision taken, in fact, under Mbeki's period, when he was around, in the 2000s, during that sort of massive commodities boom, to actively delist some of the smaller companies that were just too risky and that shouldn't have been listed in the first place. And so the number of listings went down, but our overall market capitalization went up.
So what your strategy then is for diversification of what is listed there in the JSE?
So what we are doing, we are a highly concentrated market. We've got, let's say, 6 big banks, we've got a handful of big mines, and we've got 2 massive or 3 big telcos, one coming to list soon, Cell C. And then we've got Naspers, which is obviously a giant. And what we are doing is we've recently introduced JSE private placements, which is a private market. So instead of companies having to comply with listings requirements, these companies now can apply for funding in a fit-for-purpose, less red tape type environment. We've got more than 50 companies who are looking for funding, and we've got more than 25 billion rand in investor capital, so dry powder, guys looking to invest. These companies range from renewable companies, people building hospitals, schools, various different companies, and that is proving to be very successful in helping to diversify. We're also doing quite a lot of work in the SME market. So I think those are definitely areas that we are working to, and we are also looking to try and improve and increase the number of international listed companies. We are working with the investment banks into Africa. We're working to encourage, we've got a few listings from NASDAQ and from the London Stock Exchange. And all of these kinds of companies give us diversification of investment opportunities for our people who are building for the future.
The listing requirements are often blamed for small players. And I wanted to, earlier on offline, you were telling me about the deliberate push for small, medium enterprises to play in the space. And this, obviously, from how I'm reading your immediate comment, it's much difficult to play in the JSE as a small, medium enterprise. Yet this is the story of how, including the big tech companies, this is the story of how they start. Venture capitalists, this is the story of how they start. Startups, this is the story of how they start. And their capacity to play in that space and get investments seems as well to be blamed on listing requirements.
And again, so I think there are two options. Firstly, the private markets, and they can get debt or they can get equity through that private markets, which is JSE private placements or JPP. And then we recently introduced a project called market segmentation. And we basically positioned the main board into two different segments, the prime segment and the general segment. And 27% of eligible issuers have gone into the general segment. And then this new structure is more of a fit-for-purpose, suitable, efficient regulation. And it's tailored to the size and the liquidity of the company. So these companies are able to still build up investor confidence, but they don't have as much of what you would call the red tape. So we've got more capital enabling measures that they can make use of, significant cost savings in their listing, their costs to be listed, efficient, cost-effective financial reporting, and also greater flexibility for the boards to manage the business. So we are very alive to the fact that all big companies started small. Capitec is a great example. And these companies must be given a chance, and we must ensure that we enable seed capital and we open up capital access.
Let me ask about then these listing conditions. And you operate in the most unequal society in the world. With your market capitalization at over 20 trillion rands.
Yeah.
You operate in an economy with chronic unemployment. The unemployment that is on the rise. What is JSE's view? Firstly, diagnosis of the problem of unemployment. And in what way could you assist capital investment into labor-intensive industries, taking into consideration that one of the problems for international players to come play in that space, to expose themselves to that risk, is that local capitalists themselves are not exposing themselves to that risk of labor-intensive industries, which are often, long-term type of investments where, return is going to come in 10 years. If they are startups, we know in 3 years they might get out and you start seeing returns. In what way are you driving, particularly the JSE, towards the problem of unemployment?
Yeah, and unemployment is a real scourge in this country. Of course, the unemployment rate doesn't take account of the informal sector, and there is a lot of earnings generated which doesn't come into either our GDP growth, our tax, or our unemployment figures. And there are various different views on how big that sector is. But back to your question about what is the JSE doing. The JSE is a very important capital formation environment. And unfortunately, over the last 20 years, we've seen a lot of high net worth individuals, a lot of trusts moving their money offshore. And many of those guys are speculative. They're willing to take a risk, and their risk appetite is much bigger. And so the ability and the possibility of our young people who are opening up tech businesses or renewable companies are struggling to access money. If you look at what's happening in Kenya, that business is booming. Why are we not growing as we should? And I think more needs to be done, both by government and by private sector. What the JSE is doing is we collaborate with our broader ecosystem, so government funders, both debt and equity and DFI and alternative funders, and also the development agencies. And then we do funding readiness training and direct funding readiness support. So
how much funding are we speaking about?
That is for SMEs, and we're talking, there is a capital ask of more than 15 billion. In fact, I think it's closer to 20 by just the companies that are listed on our JPP platform or who have asked for funding. So we host funding readiness roadshows. We've done a number in the Cape, in a couple of other provinces, and we're expanding. Recently, we were in Soweto and we had various road shops and workshops, even in areas like Saldanha. And ultimately, we have these capital matching events. So this year we are hosting an event in Gauteng and in Limpopo in November, and then in the Western Cape we'll do in February. And this is really trying to bring together funders and people who need funding. All of these people often require a bit of support in how do you develop a business plan, how do you position your message for investors, because they're specialists in producing whatever their goods are that they're producing. And so there's a lot of work that's required to make them funding ready and bankable, and then there's a lot of work to try and attract those funders. We also believe that tax incentives are a very effective measure to encourage investment into this sector. Australia and Canada have booming exploration initiatives, and we are falling way behind. We're the sixth largest exploration. Our exploration is sixth across the continent. Burkina Faso, DRC are ahead of us. And we need more policy enablement to encourage investors to invest into these businesses.
If you've just joined us, Bantwana Benkosi, this is Power Talk with me, Mbuyiseni Ndlozi. I'm in a conversation with the CEO of the Johannesburg Stock Exchange, Dr. Fourie. And we're going to take the headlines and continue thereafter with the conversation. The headlines by Nyakalo Defu. Stay tuned.
Power Talk with Mbuyiseni Ndlozi, where your voice is heard and opinion matters.
We're still with the CEO of the Johannesburg Stock Exchange, Bantwana Benkosi. If you want to pose questions or join the conversation, 0861987000. The CEO would really like to hear from you, as I do myself. I want to go back to this question of unemployment, just to wrap it up. And my sense is to push back on the conditions. I see the work to raise capital and try get people who need funding with people who are funding. But are you unable to say to the big guys, let's set ourselves employment targets?
So, Mbuyiseni, we are operating in a very complex regulatory environment. We've got the Companies Act, we've got BEE legislation, and then the JSE has its own listings requirements, and the accountants have their own IFRS requirements. And we need to make sure that we all work together in a harmonized environment. In fact, I met with the BEE commissioner a couple of days ago, and we certainly work together with all of those agencies and all of those pieces of legislation, but we would not put into our legislation something that repeats or duplicates what happens in another. So we have that you need to remain in line, and those companies need to comply with BEE requirements. What each company is doing is really, I think, the important question. And what the JSE is doing is that we have a program where we sponsor black-owned brokers. And we introduced this in 2016. And those companies that with the Financial Sector Code qualify with 51% black ownership and a turnover of less than 100 million, we give them 33% off their cash trading, their equity trading fees, and that's paid quarterly in advance. And we also give them 33% off their connectivity fees. And so this is our way of reducing the costs and enabling employment. And I think each business in their CSI and in their BEE programs need to be focusing on those sorts of elements and making sure that the money gets to the right recipient, that there are no intermediaries, and that it achieves genuinely what it's meant
I
to
see,
achieve.
BEE. But another day, we'll talk about that. I think there's a very misleading terms of reference in that public conversation. But you address a lot of these, and I mean, you're sort of a captain of South Africa's capital markets. And I argue, shouldn't the messaging be that the investment strike needs to stop? We need to, and that will bring with it international investors. We need to shift the attitude of the big players that South Africa is a country that is actually working. You can invest in capital, labor intensive industries where you're going to get returns in a few years. That this is also the destination for that type of investment, not just Taiwan, South Korea, and Brazil, but that this place must not be ignored first by South African big players. This is the messaging, in my view, that I think is not being acknowledged, and that is necessary to shift our fortunes when it comes to chronic unemployment, which is racially structured, gender structured, but also that can actually lead to growth.
And in Mbuyiseni, the whole purpose of the JSE is to enable A, capital to be raised, and then B, the man in the street to invest, and they invest through their pensions to earn, to save. And on the capital access, what we are doing is trying to ensure that all our regulations and the access to capital is available to companies, and thereby they're able to invest in expanding their mines, in building renewable factories, in job creating initiatives. And one of the critical things that is required to make capital flow is investor confidence, both business confidence and consumer confidence. And unfortunately, over the last 10 years, we've had a low growth environment, and investors shy away from environments that are not growing. We have had a lot of structural change over the last, since over the last 2 years or so, we're starting to see a lot more investment into infrastructure. The current cycle, the bull cycle in the commodities environment, will hopefully encourage those mines to take that money and invest more, which is job creating. And so our whole purpose is to get capital to flow, and the outcome is job creating.
I want to go now to the regulatory environment, and you were celebrating being one of the proper stock exchanges in the world, top 20 globally. What happened? How did you not see Steinhoff and the corruption, which included what are supposed to be credible actors in the different industries? What happened to Steinhoff? How did you miss it? And what are the lessons? And I'm interested in a similar question, which you, of course, will be able to guide us on your understanding and your approach on it. Steinhoff's experience, the lessons that can be drawn to curb illicit financial flows, particularly that we are told in the continent we lose 88 billion a year to illicit financial flows. Some of these people who are engaged in illicit financial flows are listed companies on the JSE.
Yeah, Mbuyiseni, we operate, as I said earlier, in a very complex environment where you've got law enforcement, you've got the NPA, you've got government through things like the Companies Act and various other regulations around fraud, and then you've got the accountants with their requirements for forensic auditing or general auditing, and then you've got JSE listings requirements. Unfortunately, when you have bad actors, they often work in a very, very expeditious and very smart way, and sometimes it takes longer for these fraudulent activities to actually come to the surface. And what I can say is that the JSE works very closely with law enforcement. We work with global law enforcement and local, because many of these syndicated fraudulent activities are activities that cross our borders. And we are working, and we continue to work to ensure that we do our best to avoid these sorts of things. But fraud is a very difficult thing to pick up in the initial stages sometimes.
But what lessons then have you drawn? Have you done something to not have a repeat of Steinhoff?
So we certainly work very closely with the accountants to make sure that the auditing that takes place is rigorous and addresses any of the loopholes. We look at our listings.
Steinhoff, the accounting firms were the ones concealing. They were the ones complicit in the fraud. And this is the case as well with a lot of illicit financial activities. The reliance on self-auditing and the fact that complicit in that self-auditing are the accounting firms that in some instances actually even promote illicit financial flows, that they can get you to avoid tax.
So in Mbuyiseni, we work with all of the law enforcers. We work with all of the professional firms to root out any form of corruption.
Okay. Tongaat, Hewlett. It's a much more recent case. They misled in their financials, inflated their financials, and misled investors. You find them 7.5 million rands. That's a slab. That's not tough. That's not acting, would you say?
So in Mbuyiseni, we are governed by the Financial Markets Act, and our fines are limited to 7.5 million rand per indiscretion. So we find them the max. There are other fines that any organisation that contravenes the legislation or our regulations that they would have to pay, and those could be levied by the Financial Sector Conduct Authority. They could be levied by the courts through the Companies Act infringement. So there are many other avenues. The JSE avenue is limited by the Financial Markets Act.
So in a way, this is the highest, the highest you could find them. That's your direct response.
Yeah,
do you wish you could have fined them more?
We would like to do everything that we can to avoid any of this sort of behaviour, of course.
Okay. You were speaking earlier about BEE and the racial diversification. I'm interested in this concept of the township economy, and some of the companies I did indicate Boxer, whose operations are in rural areas and townships, but its ownership is still dominated largely by the big players. I wonder if there is something that JSE is able to do to get township and rural folk to participate, so that it's not, it is a township business, so to speak. It's competing with the Pakistanis. It's competing with, tuck shops and side hustlers and all of that. Its ownership share should reflect those people.
Yeah. So Boxer is a great example, and it was one of my highlights in the listings environment. They listed on the 28th of November in 2024, and their listing was 29 billion rand, and their shares have increased by 7% since then, and so it's now 31 billion rand in market cap. And it was a very exciting listing to see, and let's not forget that many of the people in the townships who are employed in the formal sector have pensions, and their pensions are invested in the JSE. So it doesn't, and many people don't make that connection. But when you go and retire and you withdraw your pension that started as few 100,000 rand and is now 20 million rand because of the growth of those companies, that township person is enjoying the benefit of the exchange, and that connection is often not made. Mm-hmm. What we are focusing on, and I think is a very important thing, is financial literacy and building an interest in the stock exchange by the JSE. So we run our investment challenge. We have 50,000 learners, both high school and university, who take part in it. It's a trading game, and they earn prizes of up to 330,000 rand at the end of the year, 500 rand for each of the top performers every month. And I'm always overwhelmed by how many of those kids who come directly from the townships have learnt not only about how to invest in MTN or ABSA, but they've learnt how to trade in derivatives and single stock futures, and they've really impressive. We are hosting this weekend She Invests conference, and we've got a lot of the people from the ground, from the townships, who are coming to our seminar, and this is really to empower them with an understanding of how to save, of how to invest in the stock exchange, and how to stay there for a long time so that their money that starts off as a small token amount really grows and compounds in the interest. And we also have investor podcasts which we run on a regular basis, and those have been an awesome resource for people just to get to understand what is driving each of the companies, how to think about investments, what products could they invest in that could be not as expensive. So we do a lot from a township economy perspective in empowering people with the right information on how to invest.
Okay, that's the CEO, Bantwana Benkosi of the JSE. 0861987000 if you want to join the conversation. Indeed, this is Power Talk with me, Mbuyiseni Ndlozi, on Power 987. Doc, the tariff wars, what's JSE's exposure? And I mean, capital in the continent, I mean, if you could answer that. The idea of alternative markets, Africa's free trade policies, and I realize that even the big guys in the continent, they don't see Johannesburg Stock Exchange as the destination for the listing of their companies. Nigerian tycoons, Egyptian tycoons, and so on and so forth. But now with these tariff wars, some people think it's an opportunity, but take us through the diagnosis of the JSE, particularly its exposure.
Yeah, and Mbuyiseni, actually, tariff wars have not been bad for the country. In some ways, in other ways, very concerning for certain sectors. What we've seen as a result of the tariff wars is a pivoting out of the US economy. So the US used to attract 80% of international flows. And for a decade now, and they've earned massive returns as a result of that. And because of the I'd say the coalition of the wounded, more than 60 countries are affected by all these tariffs, which go up and down, and many of which haven't actually been
policy uncertainty.
Exactly, in the extreme form. And so volatility has been good for the exchange, but what has been most interesting is that the tariff wars coincided or happened just after a few months, 6 months after the establishment of the GNU. And South Africa started to get back on the radar of the investor base internationally. And it's also coincided with the uptick in the mining industry. And so all our mines are doing very well. And so we've seen a much greater level of trading on our exchange. On average, last year, we traded 21 billion. This year to date, we've traded 29 billion per day. And so you can see a massive uptick, huge volatility. Despite the trade wars. The uncertainty in the trade wars. And that's because even though South Africa, certain industries may be negatively affected, we are also starting to produce a promising level of future growth, an expectation of future growth. Load shedding is more or less a thing of the past. There is a lot happening to restructure and improve Transnet. There is a lot more infrastructure investment that's going on. It's not yet translating into economic growth, but there's certainly the promise of that. And so those things together with investors globally shifting, and not all of them, some of them shifting out of the US, South Africa's offering returns that is way above the other, the rest of the world. So the emerging market index, other emerging markets, including South Africa, have increased by 18%. Our top 40s up by 24% year to date. So, and our companies in South Africa have been congenitally undervalued because of the previous sort of low growth decade that we've had. Gradually, investors have disinvested from the country. Now we're starting to see green shoots. I wouldn't say that it's, that we're in the pound seats yet. We certainly are developing and growing, and I'm hopeful, but I'm cautiously optimistic.
But do you have a campaign actively in the continent, the African continent that is, to get more listings from continental players?
We partner with the investment banks and we go and meet these guys, and we certainly are targeting single big names on the continent. Many of these big names think that it's very glamorous and they'll get more liquidity if they go and list on the London Stock Exchange or NASDAQ or New York.
In your term of office, will you land any of them?
Well, we've already landed some of the big ones. I mentioned BHP Billiton, who's not an African continental play, but it's an international play who wasn't happy with the LSE. I would love to do that, and I will take that as my mandate from you, Mbuyiseni.
Thanks very much. That's the CEO, Bantwana Benkosi.
Thank you.
We have to go back to trade, Dr. Laila Fourie. Thank you deeply for creating time to speak to us, and happy Women's Month.
Thank you so much. It's been absolutely wonderful to chat to you and to the listeners. Have an awesome day.
Thank you.
Cheers.
We're going to take a quick break to the ad, Bantwana Benkosi, and then right to the news. We're tracking that press conference of SANTACO, as you all remember. Hopefully it does start at 1100 hours, and we will take it up with you. But stay tuned for the news just right after the ad.